OECD issued Action Plan on Base Erosion and Profit Shifting, also known as BEPS. BEPS Action Plan recommends global country-by-country tax reporting by large corporations. This global reporting is the OECD's response to public outcries against tax avoidance by multinational corporations. These public responses brought global tax avoidance into the limelight of high-profile media coverage. Companies like Google, Amazon, Apple, and Starbucks were publicly shamed. In response to such public outcries, the OECD funded research on global issues of corporate tax avoidance. Based on their findings, the OECD issued 15 BEPS action items and recommended them for adoption by its member countries. Governments around the world are starting to implement the BEPS recommendations. Most notable of the recommendations is the country-by-country reporting. This reporting requires cross-country information sharing. Even the United States, which was ardently opposed to country-by-country reporting, proposed legislation to make this reporting mandatory as part of U.S. corporate tax returns. European communities have also responded to the so-called Google tax, which is a colloquialism for BEPS recommendations by the OECD, by preparing and passing legislation. The Google tax is being adopted across developing countries in similar fashion. Some countries are going as far as implementing stiff penalty provisions attached to the country-by-country reporting. Corporations have been concerned about the development of global tax reporting and expected such reporting to result in double taxation across countries. Companies have identified BEPS as an important issue and are beginning to assess the risks stemming from BEPS reporting. Another common expectation is that global tax reporting under BEPS will result in aggressive audits by tax authorities across countries, especially from revenue-starved developing countries. Appropriately, corporations are concerned about the increase in tax exposure and costs. In summary, there are three main risks from BEPS reporting: compliance risk, such as failure to produce accurate reports, increase in global audit activities, and potential double taxation stemming from audit adjustments. BEPS reporting risks have to be managed properly and can be mitigated. Our comprehensive BEPS software solution will resolve your country-by-country reporting needs, mitigate audit risks, and provide you the intelligence on potential double taxation. Contact Tax Technologies Inc. for further details.